In this video, we'll be taking a lot of features analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave a thought in the comment section down below. And if you're interested in learning to trade first like professional, check out our complete forex trading course on Udemy. I have the link attached in the description below as well. So in this video, we're talking about gold, crude oil, and USD-JPY. So starting with the gold chart on the 2 hours time frame, last week we talked about the possibility of price, breaking out from this slight consolidation over here, right? So over here, with price going higher, but that didn't seem to work out. And if you pull up our moving average on the 6 hours time frame, for example, just a quick recap, we talked about the possibility of price also going all the way down to this trend line, right? So all the way down to the trend line where we expected potential bounce. So we had a bounce as expected, but the bounce was short-lived because we tend to have broken this area of value, which is a solid support level, which also took out the moving average on the 6 hours time frame. So we're using a 200 EMA and SMA, and we also took out this long-term trend line dating back to the beginning of the year. So we have a lot of confluence over here with price breaking through all these levels. So what this means is there's a good chance we may see gold coming all the way down to this area of value before we potentially maybe see a move back to the upside or a collapse in the price of gold to the downside. So right now my thesis is simply following the chart wherever it leads. Right now we are trading below the moving average, 200 EMA and SMA on the 6 hours time frame, which is actually solid. So I think I will start to look towards going short rather than going long, though technically this trend is still bullish because we are still all the way up here, right? But the structure right now is starting to collapse, and this could just be the start of a trend reversal. But I don't think we will know for sure until we get into this area of value, which I think we will. Then we'll see how price reacts inside these price levels for us to determine if the gold trend is coming to an end or we're just taking a breather before we keep going up. So one of the reasons why we see gold declining right now, even though the DXY is getting weak, is because of the tension in the Middle East, so between Israel and Iran. So the war seems to be over right now. That's why investors are going back to risky assets like stock markets, cryptocurrency markets, and you see them dumping gold because they feel okay, now it's time to move from the safe bets to risky bets. So we'll be trading alongside with the overall sentiment right now, and that sentiment it's leading to bearish price movements over the coming weeks. So right now, in order for us to take advantage of this price action, what we'll be watching out for is a potential reversal, retesting the area of value, then coming back to the downside, going lower to this price level. So this is what I'll be watching out for as sort of confirmation. But this may not happen because we already had a consolidation on top of the moving average, on top of the area value before the break. So we may simply just get price, sharp decline all the way down to this area value before we start going higher again or break lower. So the reason why I'm picking this area of value, I think it's obvious from the chart, right? Because you can see we had the first rejection around this price level acting as a resistance, and now we had here giving us a confirmation, right? So this area of value seems to be a valid one, and that's not all. If you move to the 12 hours time frame, so double the current 6 hours time frame, you would notice that the moving average also closely aligns with this area of value. So there's a good chance before price comes into this area of value, the moving average might have crept higher a little, but we have no idea how fast gold is going to fall or if it's going to fall at all, right? So we trade accordingly. Right now all road leads to this area of value over here. So that's why we'll be looking for bearish opportunities to go short while we wait for potential reversals, just in case we get hints that this trend might continue, right? But right now it doesn't seem to be the case. I do think we're going lower. So going back to the 4 hours time frame, so let's go down to the 4 hours time, for example. Like I said, my bearish case scenario to go short, or I'm just going to go down to the 2 hours time frame. Most of us day trade, so the lower time frame gives us better trade opportunities to enter setups like this. So I'm going to get rid of the moving average so we can get a nice clean chart. So right now all I'm watching out for is a potential retest of this area of value. If that happens, then I'll be my confirmation to go short on a reversal, aiming for this area of value over here as our take profit target, right? That will be entering after the retest. So potentially maybe after a retest and a breakout of structure to the downside, stop loss is going to be above the consolidation list to the breakout, or it could be as high as this price level depending on your risk management. Take profit target could be as low as this area value, or you could set one take profit target over here at these lows and trade the rest of positions as we get into this macro area of value I talked about earlier in this section. So that's my first bearish case scenario for gold. Other than that, just in case we don't see any retest, we may likely get some sort of consolidation over here, right? So even if we don't get a full retest, we may get some sort of consolidation over here, like sort of a bearish continuation pattern, right? It could be a symmetrical triangle, a descending triangle, an ascending triangle. But the point is, we do get a bearish breakout after that consolidation, and that could also be another confirmation to go short with your entry placed after the breakout and your stop loss placed above the consolidation that leads to the breakout or the highs before the breakout, and your take profit target, as I explained earlier, first one can be placed here while the second one can be placed inside this area value. So that's it briefly for my gold setup. I think I've been able to do justice after explaining why I think the market is bearish, both fundamentally and based on sentiment, also based on price action. Everything aligns and leads to price going all the way down to this area of value. Now, anything can happen. You could see a massive reversal, right? So excuse me, just give me a minute. Sometimes the market can be unpredictable even if everything aligns. That's why we advise you trade with good risk management. Even if you're 100% confident in your setup, it doesn't mean your setup can't go wrong, right? So we could see a small dump, right? Possibly maybe a gap or something. Then we see a massive spike to the upside. Gold can be like this sometimes. So even as much as you may feel so much confidence right now based on maybe your own setup or watching this video, you have to trade with good risk management, because anything could happen in this market, right? Markets gives no bullshit about your setup, right? It does what it wants to do. So that's why you trade with good risk management in anticipation for potential reversals or potential, your setup being potentially wrong, right? So that's it briefly for gold setup. If you have questions, please leave them in the comment section down below. Moving on, we're talking about crude oil. So crude oil also looks like a very nice one too. This was also another chart that was fueled by the tension in the Middle East mostly between Israel and Iran. But as you know, that's kind of dialing down a little, so that's why we didn't see price making much headwinds towards these highs as I expected. I was waiting for price to get into these highs where I look for opportunities to either short or go long, right? But we didn't get there. Right now, it seems crude oil is returning back to their normal price levels before the tension in the Middle East, right? So right now we seem to be consolidating just on top of this trend line, which also coincides with this area of value here, where we had our first breakout that led to this massive move to the upside. So I'm going to go down to 2 hours time frame to see if we can clearly see what's going on over here. Yeah, excuse me. So as you can see, we have price consolidating around this trend line, which also coincides with this moving average. Sorry, coincides with this area of value, right? Which is acting as a support right now. So to go short, you could go short the moment we break through like this. That is valid, but your stop loss would have to be wide, right? Because if we do get a breakout like this in anticipation for a movement to the downside, your entry would potentially be placed under this area of value, with your stop loss placed above this consolidation over here, right? As if we get an immediate breakout, your take profit target, first one will be placed here, second take profit target will be placed over here, while you can trade the rest of positions as we go lower, right? So I don't think crude oil is going to go way lower than $55 per barrel, right? But we have to be careful. So if we do get a nasty price movement all the way down to this price level with a solid red candle, then by all means you could jump in. If you take a major price movement, this will give you approximately 300 pips stop loss. So remember, risk management is vital to trading these assets like gold and crude oil. So take profit target first one will be approximately 250 pips. So that's a ratio of 1-to-1. Sounds decent in my opinion. And all the way down to this price level will be around 700 pips. So a risk to reward ratio of 1 to 2, 1 to 3 ideally isn't a bad thing, right? It doesn't sound too bad because making profit either way if you are right. But if you are wrong, then you are exposed to stop loss as wide as 300 pips. Now, alternatively, if you don't want to jump in, you want to be more conservative. So this for an aggressive trader. If you want to go aggressively, good risk management, you can do that. But if you want to be more conservative to watch out how price reacts to this area of value, which is what I recommend a lot of you do if you are trading very small balance, then you will notice that we could come into this area of value, consolidate more, right, before we eventually break out. So this could happen. I'm not saying it must happen. It could happen. And if this happens, this could give you a better risk to reward ratio. Your entry could be placed here after the breakup from this consolidation, and stop loss placed above these highs, right? These highs that leads to the breakout. And if you take note, then this will bring your stop loss from 300 pips all the way down to 150 pips, as the case may be, which looks and sounds decent. So your first take profit target will give you a risk to reward ratio of 1 to 2. The second one will give you a risk to reward ratio of approximately 1 to 5, right? So if you are conservative, this happens, then by all means you can watch out and wait for this. If you want to go aggressively, then you can go immediately. We get a big red candle breaking out from this area of value, right? Now, it doesn't mean the pattern is going to be formed exactly as I've described on chart. So it could also take another pattern. We could get a big fat red candle, then a pullback to the upside, giving us that consolidation. So just in case, right, you want to go short when we get that big fat red candle breaking out from this trend line and this area of value, also take note that we could get potential reversals consolidation for a few hours or even days. And if you're using a broker where you get charged swaps, then that could be frustrating holding your trades for long. So that's something to watch out for if you're going aggressively, right? While for the conservative trader, you could follow the same instruction I gave earlier. Wait for something like this, a consolidation underneath on top of this area of value, then you go short, as the case may be. Now, I'm not trying to say going short is set on stone, because there's a good chance we get pop-ups, right? I don't think crude oil is going to go anywhere like, going all the way up again like this, something like that. I don't think something like that is going to happen. But like I always say, anything is possible, but I'm not expecting movement like that. But we could get something like this, right? Movement down here and a pop back up, wiping out all retail traders. Then you see price going back down. Something to also watch out for could happen. For stuffs like this, there's just no way to anticipate or tell if it's going to happen. So it's about risk management, using low, risk possible, entry very small, till you get solid confirmations before you go in with your full positions, right? So let's say you're going to go in with 0.1 lot, you could test with 0.01 lot, for example, right? If you get that consolidation for more confirmation, then you can go in with the rest of your positions. So even if you enter with a very small positions and it keeps going down, you're still going to make profit, right? So profit is profit no matter how much you make. So just pay attention to your setup, wait for good confirmations before you strike, right? And always understand that anything is possible. The market could reverse just like that. You should be ready for that using your predetermined risk to reward ratio and risk management strategies, right? So lastly, we'll be talking about USD-JPY. So the reason why I don't talk much about currency pairs is that chart looks messy right now. Euro USD, GBP USD. If not, I've taken a look at those. But the only clean chart I think is worth looking at right now is the USD-JPY, right? So USD-JPY, we've been in this symmetrical triangle for quite some time. I think a week or so, or a few days, as the case may be. Last week we talked about the possibility of price breaking out from this symmetrical triangle. We did get a fake out and then move very far, and now we seem to be crawling back down, right? Yeah, so it's been consolidating for more than a month now, excuse me, and we did get this massive spike to the upside with a good pullback. But now that DXY is getting weaker, I do think there's a possibility of a potential breakout to the downside, right, in continuation of the bearish move. We can see from here all the way down to this price level, but there's no confirmation. I have no confirmation yet. Just based on what I see on chart and following DXY, I think this is the most likely scenario, but I could be wrong. I don't trade currency pairs, you know that, but I'm just bringing this to your attention for those who do. So if you're planning to, go long on USD-JPY or go short, take a look at this pattern, take a look at this chart. Also, take a look at the DXY, right? Because you don't want to be going long if the DXY starts falling nastically, right? So you want to be on point. You want to be able to follow up the chart. So pay attention to the DXY. So I'm just going to pull up the DXY chart real quick. So this DXY chart on the 4 hours time frame, right? And if you see what I'm seeing right now, you will notice that on the 4 hours time frame, it looks extremely bearish, right? I'm going to go down to the daily time frame. Let's see. So even on the daily time frame right now, we've taken out this significant area of value, right? Which was what was holding or prevented DXY from going lower, right? This area of value dates back to 2022, so approximately 3 years. Now we're trading below, and I don't see any reason why we don't keep going lower on the DXY. So if the DXY keeps going lower, USD-JPY is expected to go lower as well, except the Japanese yen gets extremely weak, right? Then you can see DXY, USD-JPY going higher. Other than that, try to stay on top of your chart if you're trading USD-JPY. And if you take a look at the structure over here, I don't see any reason why we don't break down, reverse, maybe all the way down to this level before we see some footing, reversal or lower, right? Though the structure looks bullish, but DXY controls most of the movements we see across major currency pairs. So something to pay attention to, employ your good risk management. What I'll be watching out for this week mostly is the gold and crude oil charts. That's it from me guys this week. If you have questions, please leave your thoughts in the comment section down below. If you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below. That's it guys. See you next week.